Let's have a look now at trading gaps. Let's move away from the pivots and the consolidations. We've kind of focused on those two strategies. Let's look at the gaps themselves now, and really recognise first of all a gap is simply a space in between a chart price bars where no trading takes place. Gap down can consist of a number of bars where the lower the first bar is higher than the high of the second. It basically leaves an unmarked space in between, and the gap up is obviously the flip side of that. Now, what causes it? Well, a number of things can cause it. Outside market hours trading, market makers trading on unexpected news, unexpected events, anything like that. See, when stocks open up in the morning, whatever's happened overnight can obviously cause that market to then gap in a particular direction. If it takes place during hours, it can really only be seen visibly on an intraday chart, clearly, because you wouldn't see that movement on the daily chart. There are four major types of gaps. Let's go through them. We've got a simple common gap, a breakaway gap, which generally starts moves, a continuation gap, which is a gap within a move, and then we've got an exhaustion gap, which basically ends a move that's in play. So a good example of a common gap would be one which is just on very low volume. There's a small gap in between a run that's already in play. We don't trade those because it could go anyway. It could go in either direction, could get filled, so we certainly don't want to do that. Breakaway gaps, they are often traded by US traders at market open time. It's very much for the sort of high volatility, high plays. When we were talking earlier on about one of the chaps that was on our trading floor and did 450 points in a couple of hours, he was placing breakaway gap type trades, and some of the more intraday aggressive gap strategies that we're going to cover as we go throughout the next module. And then they can be very powerful, very powerful. Certainly, it's really the domain of the US and FX trader. Continuation gaps happen in the middle, as we said. We can trade those, and exhaustion gaps really do end a particular move that might be currently in play.